So B Roman 2. So we did the individual financial statements, and we got 1250. They should always be actually almost the same. B Roman 2, the gain stock loss on the consolidated statement of profit or loss. So right there. Shillings are in what? Millions. So take like 30 seconds, do angalia format, tuandika format, how to get the gain or loss in the consolidated financial statements. You start with what? Proceeds. So give us the proceeds. Proceeds on disposal. How much were the proceeds? The amount we received when we disposed the subsidiary. It was disposed for how much? 40? 47, true. I still remember that. Then you add, as per your format, what are you supposed to add? Fair value of investment done what? 10. So if you have not sold everything to the group, you add whatever you have retained. In which note were they was the subsidiary disposed? Note 4. Pareto disposed of its investment in D. For that, when the fair value of the identifiable net assets was 6250, fine. The fair value of the remaining, the fair value of the remaining investment, remaining 40% equity interest was 43 million at disposal. So how much? At that date, when they were disposing, what was the value of the net assets? The value of the net assets when they disposed? 6250. So that was the net assets. But what they retained back, which was not disposed, they disposed 60%. 40% was not disposed, yes. So the value of that 40% which remained is equivalent to what figure? 43. So the retained investment is 4,300. That is what the examiner said with their own mouth. So that one comes to how much? 9. You less net assets done what? Net assets disposed. The net assets disposed, the same note. They have said on the date of disposal, when the fair value of the identifiable net assets of E was 62.50. So on the date they were disposing, the fair value of the net asset fine, it was 62.50. What they have retained is 43. So when you subtract 62.50, then you add 43. So hakuna student atakuja aseme net assets disposed is 62.50 minus what? 43. Then they fail to capture this. On that date, the total net assets is how much? Then they disposed. But when they disposed, they returned back. They returned back how much? 43. So the net disposed will be this minus this. So if you take this minus this, you bring here, you don't have to capture this one. Yeah. But when you come and say 62.50, it's still the same thing. Yes, but now, ule mujara enter in direction, we lose 1 mark somewhere there. Yes, atapoteza marks. Because, the total is equal to the total net assets, ordinary share premium retained earnings on that date was 62.50. But when they sold, remember they never sold everything. They sold what percentage? 60. They sold 60%. Then they remained with 40. So this 40 which remained had a value of 43. But the total 100% was this one here. So I'm saying there's a student who will say, what was disposed is 6250 because total is 6250 minus what they have done what? Minus what they have returned. So that you get what went out, which you need to subtract. So what went out will be this minus this, then you capture that figure here, you subtract that value. But there is no, you will, that person will do that thing because everything here should be marked. But if you say 43 and you have this one, it's the same thing. It is the same. So the 43 upper, EV plus 62 minus 6250. 6250 minus 43 is how much? Yeah? 1950. So I'm saying there's a student who will fail to capture this. He had a 247, then he fails to capture this one. Then I put up a 17? 1950. I put your 7 minus 1950. Will the answer not be the same? 9 minus this and 47 minus this. Are they not the same? So they're the same. Unajua mnakaa gloomy ni kama hiyo kitu haingii. It's something very easy.
62 is taking the 100%. From 62 we are exposed to no. We are exposed to 60%. Why don't you calculate?
No, sometimes you know market value. Sometimes if you are given market value, you don't have to calculate because market value depends on that. So many factors. So on that date, the value of the net assets was how much? 1,000. And they never sold everything. Examiner is telling you the total was this, but after selling, whatever remained had a value of how much? 43. So how much was sold? So the difference. If I tell you the total is 6250, but we remained with 43. So how much went out? So the difference. Yeah. However, now according to the structure, how the standard requires, you check whatever you are returning back, you should add to whatever you are receiving. So if you say 43 plus 43 minus 6250, so it is the same with saying 47, then you come and subtract the difference. So it is the same thing. Siko sawa? Sasa inabidi tuwe sawa. Inabidi tuwe sawa. 43 minus that is just the same thing. Alright, check your format again. Check the format. I want the format to sync up. In the format again, what do we check? Unimpaired goodwill disposed. So you check, were they having goodwill? Yes, we calculated. So you less unimpaired. Unimpaired goodwill, then what? Disposed. Unimpaired goodwill disposed. Unimpaired goodwill, if I say it casually, it is the good goodwill. Good goodwill is which goodwill? Goodwill which has not undergone what? Impairment. So can you check where we calculated goodwill of DAFU? Eh? Goodwill was 15, and that is what the parent was controlling. Yes, so on that date, goodwill of DAFU was 15. That is what was disposed. Your answer should be again or loss. In most situations, you will find it being the same with the other one you got. Can you check to confirm? Check to confirm. Then we consider that one done. What's up? How much? Again, yes, it was again. So gain on disposal. Gain on disposal. 1250. You get how many marks? 2 marks. So let's go to C, consolidated statement of financial position. Did we analyze that question? This, how many months old? This one, because that's what is going to help us. Please, let's check. Let me refresh there because I know some people are not there. Even they have forgotten. The financial year is ending when? 30th? 20? So it should start when? 2020, yeah? Pareto acquired Pamba when? 1st October 2020. So Pamba is how many months subsidiary? From here to there. 9, eh? So Pamba is 9 months subsidiary. Then this Dafu was disposed. It was disposed when? 1st 2021. So it was a subsidiary because they were controlling 100%. So you check, it was a subsidiary for how many months? 9 months from here to there. So 9 months subsidiary. How many months associates? 3 months associates. Correct. For consolidation purposes, if at all, we are not required to prepare P&L. Oh yeah, we are not. But just in case, if you are required to do P&L, profits from loss account, then you will take Pareto plus Pamba, but Pamba for how many months? 9, eh? Yes, 9 over 12 plus Dafu for how many months? 9 over 12. For the period, it was a subsidiary. Then consolidated statement of financial position, we'll take Pareto in full, Pamba in full. We don't apportion the balance sheet. Then Dafu will not appear there. We'll only check the investment. So we are required to consolidate for Dafu. So Dafu, you will be taking this one here. Assets are never apportioned. So take Pareto in full, Pamba in full. Let's start. So right there, Pareto group. Pareto group. Pareto group. Consolidated statement of financial position. How was yesterday, now that you rested? Huh? You became sober. However, you know, I thought there is time. There is no time. The remaining Sundays, unajua nilikuwa nafikiria ati tunaenda tukiskip wapi? Tukiskip mtihani. So we won't skip. In fact, I shall double the remaining classes. There are only 3. Because I can't teach you up to 31st. If I teach you up to 31st, you will fail. Because first ni mtihani. So that day people are very serious. Hii kitu ya mwisho hii. So hata nikifanya kitu hakuna, that one. Focus. So that last day is not good to teach because people think that hakuna. So Pareto group. Consolidated. As a 20. Be ready. So shillings were in millions. So tufuate hiyo hapa sasa nilitasimamisha sisi tuifanye tu sahihi jamaa. Investment in associate, we'll have to calculate it, but let's just move. So non-current assets, we have property, plant, and what? treatments. So you only add Pareto and Pamba. Imagine that is the question here. You are Angalia. Are you aware after it has become associate or joint venture, you're not supposed to consolidate? So once you have the two, just check whether there was revaluation UPFA. Was there evaluation? I think so. Was there evaluation? Note number? Note number 1. Number 1, paragraph 2. Check note 1, paragraph 2. At acquisition of Pamba, the only adjustment required to the identifiable net assets of Pamba Limited was for land, which had a carrying amount of 625, less than its fair value. That is revaluation gain. So you add. Luckily, it is land. If you find these other items, they normally undergo what? Depreciation. So you will have charged depreciation, then you do what? You subtract. So this one you just add revaluation of 625. Less than fair value, it means fair value is more. It's more than the book value. That one gives us how much? 20? 705. 775. Next, investment in Pamba. Investment in subsidiary you replace with what? Goodwill. Goodwill. Goodwill is the goodwill which has not undergone impairment. There was no impairment. So can you check? Check the goodwill we got for, was it the 115 number 3? 3,000. So goodwill we calculated last time and we got 3. Then investment in DAFU, you come and say investment in associates. Investment in associates. Now that one we have to check. We have to do our working. So have a small working outside there. You call it investment in associates. Then come and boom is something which is very easy. We can even do it inside there. On the date we were disposing DAFU, in that note number 4, check note 4 well. How much was the net assets on the date we were disposing that subsidiary? How much is the net assets on the date of disposal? 62.50, correct. Those are the net assets. On the date we acquired, DAFU had been acquired a long time ago. So the date we acquired will not be actually relevant for us. Check here. This is DAFU. I want to deal with the DAFU specific. On the date of disposal, their net assets is 62.50. On the date we acquired them, how much was their net assets? In that note 3, check. We had added somewhere. When we were calculating goodwill, can you check where we did goodwill? You will get the net assets on the date of acquisition. We had added all the net assets of DAFU. It was 42.50. Then check for me the total net assets, the closing net assets. The closing net assets in the balance sheet. When we say closing, it should be the balance sheet. Our net assets is the total equity. Equity. Are you saying 82.50? Yes. Yes, 82.50. So when we talk of the investment in the associates, it's very simple. Very simple. Very, very simple. You can even get from what we have. How can we get that investment at the end of the year? How can we do it? Can we take 82.50 in full? Tell me how to go about it. Anyway, for time purposes, let's not waste time. To get the investment, after we acquired, that became associate from this date. Sure. So it means, it became associate from this date. From that date, how much did we retain as investment in that company? It's 43. So 43 plus now what will come after? What is coming after will take 40 what? %. And what came after is 2000. So 250 minus 6250. Someone will say, why are we dealing with net assets and not profit? Because it should always be initial. Yes, Farida, that's okay. Initial investment plus post-acquisition profit. Of the net assets, we have 3 items here. We have ordinary, share premium, and retained what? Earnings. Ordinary and share premium are constant. So the difference, what causes the difference is just that profit. So when you're subtracting this, it's just like getting a profit because shares and ordinary remains the same. So the date we were disposing, we retained 43 in that company. Then now this one came after what? After acquisition. So investment in associate will be 43, which is in quotes the initial investment, plus 40% of 8250 minus 6250. Tell me how much. How much? 51. Okay, that is 51. Then we have financial assets. Financial assets. You add 31 plus 28, and there is no working to that effect. So that will be 59. That is 59. Nothing else under non-current assets you can add. When we add, what do we get? Current assets. Was there UPI? They just said current assets. So anything which touches on current assets, you are just there. The things you need to check are 3: current assets, UPI, intergroup debts, cash in what? Transit. So was there any? No. So just add. Adding what plus what? No, there's something we have to top up. 3850 plus 4425. There is something I want us to adjust, which even you will agree with me. Note number 4. Note 4. Who check note 4? Okay, I want you to read note 4, then you tell me what is this I want us to adjust. There's something I'm seeing in note 4 which I think and believe we should adjust in current assets. Check and tell me which one. What even you have seen and you are suspecting, especially what you are suspecting. What are you suspecting? Or you are not suspicious? Are you suspecting anything? Yes. The amount we received on what? Disposal. Because they are saying they disposed it at how much? 47. Then down there they are saying they are not accounted for the disposal. So it means that cash has not been debited in the cash book. So you add 4,700. You can indicate what it means, cash on disposal. But there are some questions. Examiner says the parent had already accounted for the disposal, but not the group. So if parent had accounted for, then it means they have adjusted their what? Cash book. So we just do for the group. So you don't need to bring it here. But if they say the group has not accounted for it, then you have to. How much? How much? 12?
975.
975. Therefore, total assets. Me, what we are doing here is not even making me happy. What you need to understand is that one, Dafu became an associate hid within. So then balance sheet can never be a portion. Imagine you swallow because someone will come and say, and let Dafu 9/3. Una portion, another portion. No, 9/12 that. Wacha tuchukue assets and liabilities for the period it was a subsidiary. No. Once it has become an associate or joint venture, it will only appear in the P&L where you will apportion. Balance sheet you will have to know. So examiner naona hiyo kitu ni ngumu, very serious. Na indeed, hiyo inafanya mtu arudi fellowship. How much is this? 7. We are going for prayers, but I want you to bring for me this one. Equity and liabilities. So you will bring for me ordinary share capital. They said they never issued more shares. So parent only. Share premium, parent only. Retained earnings. That one we will do together, don't struggle. NCI, we will work it out together.
It's supposed to be 925.
It's supposed to be 25. 75, 25.
925. Is that 8 plus 45?
Is 38, not 38.50? So iko sawa? Sasa umesikia hiyo samahani ama umesikia sahani hapo mwisho? Nataka muendelee non-current liabilities. Hata wamesema non-current liabilities. I don't think if there was a group loan, you'll just add current liabilities. You can just add. There's no adjustment to those ones. Sawa, Susan. So bring those ones, we remain with NCI and retained earnings, then we complete.
Is there anybody who wants to? Is there anybody who wishes to? We've been doing it, but that's what the mind. Is there anybody who wants to trust me with his or her money for today? I have a shop. I have a shop. I don't do money, so it's not fair. He's on permanent pension. Na sina hii pesa. Nilizolea kabisa.
Just 45. Just 45. 45 the figure. You're saying anyone.
No, see, there is no fixed first. There is no fixed amount. Hakuna fixed amount, whatever you have. No minimum, but there is a caveat. It's a token of appreciation. So we don't want the figure, but something that you feel like near umesaidika. Goodwill.
there.
Nashukuru preonekana. You know, today kuendelea kuchakachaka hapa. It's your action. I will do everything you do.
So give me the figures. Ordinary share capital, 10. This other one, 5,000. This other one. Are you 209? Yes. They're not correct. For the ordinary and share premium.
These are which you say whenever installation is done, shares. Make adjustment on that. So I confused with that. That I will somehow.
It was through shares.
Yes.
Note number?
One.
Note number 1. On 1st October 2020, Pareto Limited acquired an 80% equity interest, or I get what you're saying, but it will not affect. In Pamba Limited, when its retained earnings stood at this, the purchase consideration comprised 1250 million of Pareto Limited shares with a nominal value of 1 share at a market price of 1 shilling each, at a market price of 6.8 each. Okay, at acquisition. So Pareto gave out 1250 million shares with a par value of 1, but they had a market price of 6.8. So I know what you want to say. Now we need to add 1250 to ordinary. Then we take 5.8 as share premium. No, you see in this what the examiner is saying. You see like that other one. They were telling you parent was giving out, for example, 1 share for every 3 or for every 2 on acquisition. But you see, in this case, the parent, the subsidiary, the members of the subsidiary were not subscribing to this on any basis. What the parent did, they valued this number of shares, then they multiply to compensate. So it's not shares they are giving those, that the subsidiary. The issue comes when they are giving them to compensate. This one is to settle the purchase consideration purely. So unless they say this for this, then you check how many, then you multiply and you adjust for shares. And I think that is why the examiner was being specific on note number 5. None of the companies have issued any shares since Pareto acquired its shareholdings in them, but now that one is referring to their subsidiaries. But unless they say they were issuing, it's what plus what? 70. 8,500 plus, giving you, proceed. Current liabilities, 4775 plus, giving us 65. Yes. We assume we are always correct. Which one do you want us to check first of the two? Let's start with NCI. NCI is always easier. So start with NCI computation. NCI is equity. The equity of NCI. Were we given their fair value on the date of acquisition? Check for me in any note. Pay post-acquisition profit. On the date of acquisition, I think it was mentioned somewhere. Yes, I've even seen it. Have you seen it? Note number 2. In note 2, the group's policy is to measure the non-controlling interest at acquisition. At the date of acquisition of Pamba, the non-controlling interest had a fair value of 21.25. So their fair value in acquisition in quotes is their equity on that day. So fair value on acquisition. The fair value is 21.25. Then you add post-acquisition what? Profits. You add post-acquisition profits. Post-acquisition profits. Post-acquisition, parent was controlling 80. Sure. Yes. So minority will take what percentage? 20. Remember, NCI we are computing is in the books of Pamba. But it's one NCI at the end of the year. So remember, this is Pamba. Check for me. The date we acquired Pamba, how much was their retained earnings? Check for me that one. Yeah? Note number 1. Check note 1. On the date of acquisition, their retained earnings stood at 35. Right now, how much is their profit? Right now, as we speak. When you say right now, you check balance sheet. Check the balance sheet retained earnings of Pamba. That is the close of the year. 52. So take 52.50 minus the profit by then. So the difference is the profit which came after acquisition, which is how much? So 52.50 minus 35, they take 20%. What do you get? After taking 20%. 350. Full stop. There were no impairments. If there was impairment, I adjust depreciation, UPI, depending, there is nothing. So adjust. $24.70. You bring it in the balance sheet here. $24.75. Can you give me retained earnings as the balancing figure? Subject to Ate what? 30? 270? That one? That is very difficult for us. Can we check to confirm? So let's do our working. So I've retained earnings there. Do you know hapa ukiambia Charles 80 lazima atafikiria kwanza. Will it connect very fast? So let's do retained earnings. You retained earnings before to find the sample. Kuna kitu tulichora hapa. Najua itatokea issue. What was the retained earnings of DAFU on the date of acquisition? Is going to help me ahead. DAFU retained earnings on acquisition was? Yeah. Oh. No, not retained earnings per se, but the net assets, the total net assets on the date of acquisition. Because the net asset retained earnings is what is changing. So net assets on acquisition of DAFU was 6250. The total Mulligan Blades. On the date of acquisition, the total net assets was 4250. Yes. And on the date they were being disposed, 6250. Then in the balance sheet, 82. Those are the net assets. So in these net assets, what is changing is the profit, because ordinary and share premium is the same. So you will, I think it will be applicable somewhere. So just write for me retained earnings for the group. Retained earnings for the group, you bring all of them. Let me start with Pareto. When the income statement is not there, you cannot start from brought down, because brought down is closing in the balance sheet minus during the year you part the openings. So here we don't have balance P&L, so you will go for the carried down in the balance sheet. So Pareto carried down, how much are you saying? 70, 78, 25. But for these two companies, you don't take the carried down, you only take post acquisition, what came after they were acquired. So before I bring that, remember in the individual books of Pareto, there was gain on what? On disposal. It was how much? In the individual financial statement, they were supposed to recognize gain on disposal of how much? 12, 50, 12, 50. Then you add post-acquisition. Post-acquisition profits. So post-acquisition profits, let me start with Pamba. So Pamba, parent will take 80%. 80%, we have done it up for XCI. So just check that difference. That is still what the parent will consider. What minus what? Yeah? When you consider that 1400, the difference before you take, but before the percentage, after percentage, yeah. So 50 minus 35. So after that, you're 14. Then we go for DAFU. So DAFU, you have to check it keenly. DAFU, you take post-acquisition profit when it was a subsidiary and when it has become what? Associates. So make a DAFU full column, upper sheet, I don't have a space. DAFU full column when it was a subsidiary and when it became associates. So here you go with the net assets. You know, the reason why I can't go with the net assets is because there was revaluation and the revaluation never went to the end. But this one, there is no revaluation, so it means the increase is just the what? The profits. So take this minus this for subsidiary. But when it was a subsidiary, we were controlling what percentage? 100. So you take 100% of this difference here, 6250 minus 4250. 6250 minus 4250, that is 2000. So that is 2000. Then when it is a associate, I'll take 40. But 40% of this, no. But needs. Yes. So 8250 minus 6250. That is also 2 by 2 by 4. 8. 800. Yes. Hebu angalia kama itakupea hiyo 10,000 sijui na vichwa and what. So which is which? 1725 plus 1250. 13 to 75. How many marks? For balance sheet. 12 marks. Six times 2 is about Google. How many entries do we have? In that balance sheet, we are having, I just want to see how it can be marked. There are 12 entries. Current liabilities. They are 11. Eh? So if they are 11, don't think this book will say any 6 times 2. No. This one should be marked this way. 1, 2, 3, 4. No. 1, 1, 1, 2, 3, 4. Hivyo wacha kwanza ni mark. Hivyo unaona ikienda. Like that. So it is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Any 12. Goodwill, retained earnings, and NCI is not for everyone. So no, only for alliance people. So whoever gets it should have a credit. So how many can we get out of 12 without struggling? Provided you know that DAF was to be left out. Anybody who knows DAF is to be left out should get how many ticks here? So this one we get. To see overstate, we get this one. Investment. So we get this one. Here, 1. I know how we reason. 1, 2, 3, 4, 5, 6, 7. Kwa kawaida lazima upate 7 over 12. Kwani 7 over 12 ni mbaya? Na uje struggle. Na huko juu pia utakuwa umepata kidogo, so of course yes. There's a question we cannot dare not to do. 2016. It is the question on disposal which has never been repeated, and we sometimes nasikia watu wakisema it is very dangerous. We want to face those dangerous things, right? 2016, which one? Let me check. 2016, a certain question. This one. Question 1, May 2016, question 1. In my paper, it is page 91. Tell us if your paper differs. D group, it is D. Wale wa Swahili, D kwa Kiswahili sasa itakuwa D for that. It depends where you came from. It all depends. And more importantly, who taught you? Some of us tulifunza na walimu wao pia waelewi. Like us. Tulikuwa tunafunzwa Kiswahili na Kizungu in English. Yes. You just take, I remember. Walimu wako wanajua Kiswahili akatuambia wingi. Tulimuuliza what is the plural? Pia swali nauliza na English. What is the plural of meza? Akasema confidently, that is the only thing I can remember in class 7. Akasema you just drop Z, you replace with S. That is the plural. Na hakuna ku negotiate. That is the plural of. So Charity, there is no problem. I've recorded the class. You will see whatever you're not saying. I hope we are there. So that is May 2021, 2016, question 1. Let's go through that question. Remember, disposal is all about analysis. Once you analyze, you will get the marks which someone should get. And that is what we are looking for. Definitely, you can't get everything. So you will get what someone should get. So you read, ukiona umeshaona acquisitions, all of them, come up with a structure before and after, chora your number line, check when it was disposed, how many months it has become what, all those stories. So on 1st of April, 2011, analyze those dates. Those dates are very crucial on disposal. On 1st April 2011, B acquired 80% of the ordinary shares of S Limited. 22 Kichora. So do this because I can see there are so many. So Kichora line imeenda, don't draw vertical. B Limited, if there are so many companies, this one is? This one is? If there are many companies, don't come straight like this because so D Limited, so right here before disposal. So D Limited acquired S Limited, what percentage? 80%. They acquired 80%. Let's continue reading. And I don't know why Casneb is failing to repeat this question. It's a very good question. Then, continuation. S had acquired 60% of the ordinary shares in E. Who acquired E? S. S had acquired E. What percentage? 60. S had acquired E, 60%. Correct. Work in progress. D Limited had also invested. D Limited had also invested in the ordinary shares of A to the extent of 75. So D had invested in A Limited to the extent of 75%. That is it. We have all those two companies. So you can check the financial statements. When you check the financial statement, you can see B, S, E, and A. We have all of them. So even without struggling, just right here after. What will come will just be after. Because you can see all of them present. So what will come is after. So we continue reading. On 1st April, please underline that one, very, very sensitive. On 1st April, no, oh, that is when it was acquired, Sorry. On 30th June 2015, D disposed of a third of the investment in A, a third of A. So A is the one which was affected. So you are remaining with what fraction? 2/3, so check 2/3 of 75. So after disposal, we will have D. S is still around, is still around. Then A, this is 80, this is 60. 2/3 of 75 My senior students are getting 50%. They disposed a third. They are remaining with 2/3. So 50% makes A to B. Sindio? Itakuwa joint venture. And we know joint venture and associate out. Sure. So we don't know what we are going to be asked ahead, but let's analyze assuming we don't know what is going to be required. Definitely it must be P&L or balance sheet or both. So let's analyze assuming we don't know what they want. So come up with the number line after this. After that good analysis, come up with our number line. We check the period. The period is very sensitive. So period, check those financial statements. They were presented on which date? 31st March of 2016. So this is 31st March 2016. They should start when? 1st April 2015, correct. So I want us to check for the one which was disposed. I'll highly focus on when it was disposed. But the other ones, you check when were they acquired. So let's start with S. When was S acquired? S was acquired when? 2012. So it's a full year. So 2012 to 2015, 16. So by the time we are starting, it's a full year what? Full year subsidiary. Sasa tunasemanga kizungu. Kwa hiyo kwa hiyo kusema yako sasa ndio. Hii ni hapa ni katika but then is the problem. In fact, a very serious problem. And that's why I'm always very curious with this question. Parent controlling S controlling E. Of course, we know it is D to consolidate for E. Sure. Using what percentage? 80% of 60. So 80% of 60 is what percentage? 80% of 60? 48. Sasa hiyo ninarifu hiyo swali isa. 80% of 60 is 48. Yes, I agree. Online, someone is saying the board is not clear. True, false. So now, 48% people know that students are aware that that is what? Associates. And associates are supposed to be done what? We don't consolidate for them. So that was the intention of the examiner. E is going to be consolidated for. The rule is once a company qualified to be a subsidiary of another company, if that other company is acquired, this other company will always remain to be a subsidiary. So the indirect control does not make this one to be an associate. If it was associate or joint venture from the word go, assuming it was 40, you know, if it was 40, then S was not consolidating for E. So even the indirect control, which is 32, it will still continue to be what? Associate. We still neglect. But if S was consolidating for E, then S is now acquired. Then the group will still continue consolidating for E. It is the only exemption where the minority will have more percentage than the parent. So E will be full year. No, it was acquired when? So E full year subsidiary. Subsidiary is consolidated for the subsidiary, but to the extent of what percentage? 48. Only 48 we just apply them where necessary. But the key issue, they want people are very much okay. But after 3 weeks, when kuna kitu ulisema, Inakuwa around hapo lift area tukipatana. Kuna kitu ulisema ati once a subsidiary is what? There is something. Once a company was a subsidiary, it will continue to be a subsidiary, regardless of the direct what? Control. So if the examiner wangeweka hapa, let's say 55, that was a subsidiary. You just check the direct control. It will affect just few things like when calculating goodwill. It is the only exemption, and I really wonder why Cabinet is not bringing this in theory. You state circumstances whereby the minority shareholders will have more voting powers or shareholdings than the majority shareholders. That one arises if a subsidiary has become a subsidiary in the group, but initially it was what? A subsidiary. And even if you check just normal, you can't be acquired if they are controlling more, then all of a sudden sasa wameruka. Wanaambia sasa nyinyi mjipange na vitabu zenu, sisi tumeenda kukua acquired na mtu serious. Hapana. If they were controlling for the book, if they were controlling more than 50%, you will always remain to be a subsidiary. Let's go to A. That was one catch point, a serious catch point. So A check for me. When was A disposed? On which date? And I think this is the question here. A was disposed on 30th June 2015. 30th June is somewhere here. 30th June 2015. Initially, it was a subsidiary. It has become a joint venture. We don't want a joint venture. So check for me, it was a subsidiary for how many months? And a joint venture for how many months? Unahesabu, C6 minus 4, unahesabu. How many months? 3. So A is 3 months subsidiary. How many months joint venture? 9 months. 9 months joint venture. Correct. No markup to where we have reached. However, that one will help us to give them more. So after that, you write how you are going to consolidate for them. So how are we going to consolidate for P&L? We don't want even to know whether P&L is there or not. How are we going to consolidate for P&L? Of course, D must be there. No? So D, it will be D plus S plus E plus A, but A for how many months? 3/12. So when you are doing P&L, that is what you are supposed to do. You will take D in full, S in full, E in full, then A only for 3 months. So the examiner was trying to be, kutumia kizungu gani, anasema wenye watapata hiyo A, tutawashika kwa E. Sasa kitu mbaya zaidi, ile mbaya kabisa, watu wote wameponyoka kwa A na wakapatikana kwa E. Unajua unaenda samewa. All students hawakuona E. Can we do something? So that doing something can be done only if at least A you are portion, but E nobody are portion. But now wewe hata A ulichukua in full. Unaenda samewa. You know, if there's an issue where all students are failed, they can relax. But if only that thing is the one you have failed. So then, to me, the most critical issue is here. So kuna mtu tu here ataona D acquired S, S acquired E. Now exactly amesema first August 80%, 40%. Nasema basi. Juma alisema ikiwa hivi full. Hapana. If it was a joint venture or subsidiary from the word go, you know it was not being consolidated for. So if it was a joint, like this is associated, even in the after the acquisition of S by D, so if it was a joint venture, associate from the start, don't consolidate for it. But if it was a subsidiary, 51% to 100, please bring it in the books. So, yes, and I answer very serious. Let's check balance sheet. How are we going to consolidate for balance sheet? Online, you can type for me D plus what? It will be B plus S plus E. Hapo, si ndio? Ati minus. So it is DSE. A became a joint venture. We don't need them. It will only appear in the balance sheet once. Investment in joint venture or associate, whichever. So that is it. So anything we are going to read there are just the normal things, UPI, evaluation, but the heartbeat of the question is here. Even now, ukisikia, if this was your last question, 10 minutes remaining. Now, don't even read the additional information. Utapita. Chukua hiyo balance sheet venye iko. Kuna zingine hutapata ina adjustment. Hapa tumeona vitu vingi. Tumeona vitu mingi hazina. Ku apply hata utapata 18 over 20. Very true. This is the question. This one here. Hata assuming zilikuwa napita hapo mkifanya mtihani. Hiyo question 5. Siwezi kuambia. Nikikupea hii na you are from Alliance. Ushapita. This is enough. Let's wajana pia ndani na hii nyingine. Tuende additional information. D Limited acquired its investment in S&A when the revenue reserve. Revenue reserve is the other name for retained earnings. That is what you need to know. Revenue reserve is the retained earnings. So leo wanajifanya wataki kukwambia vitu direct. When the revenue reserve balance of S&A were 26 and 650 million respectively. So obviously ni a goodwill. Ile pre-acquisition. The revenue reserve of E amounted to 24 in July 2010 and 2750 in 2011. We will check when it was acquired to be to compute goodwill. During the year, S sold goods at a normal markup of 33 and a third at a normal price of 24 to D Limited. 20% of the goods remained unsold by D. Sio ni UPI. Kuna mtu Alliance anaweza kosa UPI? Impossible. The financial assets held at fair value through profit and loss in the books of D have not been adjusted to their fair value of how much? 1200. So it means to get a balance sheet, you capture what? 1200. What is the book value? Let's just check. What is the book value of those financial assets in the books of D? They should be current assets. You can check current assets of B. In the books, they have been recorded at what value? 1,000. So, yes, financial assets at fair value through profit and loss. They have recorded how much? 1,000. They are saying they have not adjusted them to fair value of 12. So in the balance sheet, to kifanya current assets, you recognize what? 12. Then the difference of 200 you will take to P&L as part of income. So yes. So that one has no big issue. Revenue reserve of D include the fair value adjustment of available for sale financial assets. Retained earnings Retained earnings should not. Unasema tu kwa roho hiyo ni ile kitu inakuwa ngumu kwa kila mtu. So hata wakiweka sawa. Investment income includes dividends received from D Limited. Investment income includes dividends received from subsidiaries. So anything received from subsidiaries, you're going to eliminate from the investment income, sure, as intergroup dividends. D received how much? 32 million from S. Subtract that one in the investment income during consolidation, while S received 360 from E. Even that one will be subtracted. Total dividends paid by D amounted to 2. You know, this is the parent. So that one you don't eliminate. They are the people who paid. What we subtract is what was received internally. So we will subtract 32 and also we'll subtract how much? 360 from the investment income. Let's go to number 6. The disposal proceeds from the sale of shares in A on 30th June amounted to 1,500 million, received in what? In cash. D will account for the remaining interest in A using the equity method. Using equity method means one, don't consolidate for them. 2, only recognize investment in associate or joint venture. Number 7, included in trade receivable and trade payable are the following balances. These are intergroup debts. So the one you will not subtract is anything touching on A. Any intergroup balance with A, because balance sheet is prepared at the end of the year. So at the end of the year, A is an outsider. So don't subtract any intergroup balance with A. Equal. B to S is okay. A, yes, the second one. A to D, that one don't eliminate. Eliminate those other 2. Inventories sold by S to D, 160 million at a normal markup, had neither been received nor recorded by B. That is called what? Goods in what? Transit. Yes, we are coming across that for the first time. Those are goods in transit. So we will adjust for them. Okay. All goodwill of the investee company had been impaired by 25% during the year. No impairment occurred in 2016. Yeah? All goodwill of the investee companies had been impaired by 25% during the year, or 2015. Okay. No impairment occurred in the year 2016. So it means during this year, we don't recognize impairment. So we are in 2016. Yes. The group uses the partial goodwill method in preparing the financial statements, meaning NCI will not be recognized here. Required group statement of comprehensive income, 10 marks. Group statement of financial position, 10 marks. We cannot be able to move with the question, but I want us to do some small issues. Things which will help us. One, UPI. I want you to calculate for me UPI. We have 2 UPIs. There is UPI in note number 3 and for the goods in transit. So can you calculate for me the 2? First, let's finish note 3, then we go to the other one. So can you calculate UPI in note number 3? We are very serious. We have to pass. Come and see your August. Then I do. So you should be done. The UPI in note number 3, we are getting how much? I'm at 33 and 30 imeleta kichwa. Hapo ndio kuna how we get margin from this thing. Very dangerous. This is markup, Okay. Hey, Charity. UPI is the answer serious hivyo. 466.019. UPI can't be very that serious. Unapata ngapi? 120 sounds, even if I don't know the answer, it sounds somehow better. But it is simple. Okay, how do we calculate UPI? Profit margin times the unsold what? Goods. So the unsold was? Sale was? 24. Then they never sold 20%. 20% of 24. Margin is a third. The other number is a quarter. 1/4. That is where the problem is.
How do we get that?
So we fanya hivi, tafuta kwanza alafu nikuoneshe. Wewe translate this one fast. Ama hii ndio 120. Oh, hii ndio 120. Atikiwa 33 and a third ni a quarter. How? Okay, rule simple, eh? Ukiona 33 and a third, we drop 33. But I will take you the long way. We drop 33. So markup is a third, margin will be 1/4. But let me take you the long way. 33 and a third percent in fraction form. If we got another primary in proper, so we convert it to in the mix. So we put it in 100 over what? Percent. Now percentage unajua iko over what? Si percentage iko over 100. Na 100 ikiwa hivi tuliambiwa iko over 1, si ndio? So this one then kuna ukipeleka hivi una multiply. Si ndio? We multiply how? 1 inakuja hivi. Si ndio? So this one dies with this. Inabaki a third. So markup is a third. Margin will be 1/4. Sasa type ya kuulizo ni hivi, utapata wapi kwa mtihani kufanya kitu kama hicho? Wewe shika, ukipata hiyo 33 na third drop 33. Tumia hiyo. Nakwanga hivyo. You get the same answer. So get UPI2 then, because they said at the normal what? That note in transit, what did they say? Normal markup, eh? Yes, so it means they use the normal markup, so margin will be still be 1/4. Okay, start what was trained. When goods are being sold, see parent wakiuza waki-invoice, they invoice profit inclusive. So get for me the unrealized profit. They invoice profit inclusive. Then the goods were still working on the way. So what will be the unrealized profit? What will be the unrealized profit? What will be the unrealized profit? We should have gotten it. Hata kuna ina maneno mingi. Ngapi? Sini 15. Because how do we get UPI? Senior profit margin times the unsold goods. The entire consignment was still on the way, which is how much? 60. So that is 15. So the total unrealized profit in this question is 135. Useme sasa mimi ningejua aje. Ndio Mungu amesema nikuje niseme leo. Shida ni others tena ipotee. For now there is no problem. So that is the unrealized profit. When goods are in transit, then the entire you consider for the unrealized what? Profit. So I don't want to go because 8 minutes. I don't want to do a lot because that's out, especially payments support connect. But this one I remember 135. So the only serious working in disposal is on how to get gain stock what? Loss. So I think that is where we start from. Gain stock loss on disposal. And the gain stock loss on disposal, you should work it in you should work two of them, in the individual books and in the consolidated. So I'll check individual first. Individual financial statements of D Limited. Individual financial statement. Then once we get the individual, we'll go to the consolidated. See, as much as the same, they can vary, but the variation is very small. So gain stop loss on disposal, you can even try. We are not never part. We can get one. What was the proceeds? You are consolidated, in the other. What was the proceeds on disposal? What was the proceeds on disposal? When we disposed A, it was disposed for how much? Which note? Note number 6. The proceeds from sale of that amounted to less. What do we less? Investment done what? Disposed. So can you check for me? How much did we invest in A? Ile mnasema purchase consideration. How much was it? Just check that one. Pole tu hatuna mbio. You can go to the balance sheet. Mostly kama iko kwa notes iko kwa balance sheet. Balance sheet iko kwa hapa. Then it's the note. Note number 1. Check note 1. Check note 1. Yeah? For balance sheet. Oh yeah, you check balance sheet. Investment in S, investment in A. Parent invested 44.80. So investment disposed, I want us to agree. Did the parent dispose the entire 44.80? No. Parent only sold what fraction? They sold a third. So yes, they invested 44.80, but wakauza a third of that investment. So they sold how much? Tuliweka hapo pesa yetu 44.80, but we sold a third of our investment. So that is equivalent to how much? Sema hiyo kuna. Wadana hiyo 3. 14.93. So the investment we are selling is valued at 14.93. But we got how much? 15. So there is a gain. We gain. So this is a gain of how much? 7. There's a gain of 7 in the individual books. So let's do the gain for consolidated. And you translation. Gain stroke loss on disposal - consolidated financial statements. Consolidated financial statements. For disposal, the key issue, can you analyze that question? Can you be able to analyze? In fact, group was being feared long time ago that it is very difficult. You should not start with it. Nowadays, I advocate, just start with group. No, the one I want you to start with is cash flow. Cash flow tends to be easier. You start with the cash flow, then group before we choke. Group ikuja ya pili. Then number 3 mko nafanya reconstruction. Number 4 kuna kitu rahisi inakuja. Kitu rahisi sio ni gani? Segmental, share based, employee benefits. Hiyo inakuwa the 4th. Then the 5th, the theory. Unaandika kenye Mungu amekupea kwa roho. Niko na theory handouts nimewatengenezea tawaletea. I was to bring them today. Naandika tu. Si Kiswahili, English. Lakini hiyo kitu mtu ukiwa serious wewe sianguka. Ile uongo inakuwa hapo. Therefore, thus. Na unaongeza black na blue. You can't fail. You pretend as if you know. However, comma. So let's meet tomorrow to chapter here.